Hi and welcome. You're listening to the X22 Report. My name is Dave and this is episode 1261A and today's date is April 23rd, 2017 and the title of the episode is The Bubbles Are Popping, Prepare for the Collapse. Now before I get started, I just want to make an announcement. Yesterday, Saturday, I uploaded an interview with Bix Weir on the X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It will bring you right to the video, or you can come over to the x22report.com site, scroll down a little bit, look over to your right-hand side, you'll see the video there. Same thing with newssentinel.com. Scroll down a little bit, look over to your right-hand side, and you can play the video right on the site. Let's get into the economic collapse financial news. Now, over the years, we've been looking at the economy, and we've been watching it deteriorate day after day. Now, during Obama's presidency, he was out there telling us that this is how the recovery is. We know that the BLS and the rest of the agencies have been manipulating a lot of these numbers. We started to realize that the unemployment number made no sense whatsoever. Other individuals started to jump on board where they were outspoken saying, yeah, these numbers make no sense whatsoever. And then we started to look at what was really going on in the economy with housing, with retail, GDP, manufacturing, restaurants, and everything else. And we noticed that the economy is actually contracting on itself, not expanding. During a recovery, during the good times in an economy, the economy expands. It grows. People get better paying jobs. Retail expands. More stores open. But we're seeing the opposite right now. And we're starting to see these bubbles start to pop. And everything that we've been talking about, corporate defaults, we've been talking about how the market has been rigged, how precious metals has been rigged, and that's been proven because of the investigation and lawsuits against certain banks. We're starting to see that all of this is starting to come down around the manipulation. And we're starting to see that the economy is starting to implode on itself. I mean, just look at retail right now. Now, I remember when I started reporting on retail on how each holiday season they were getting worse and worse as time went on. And it made no sense because if unemployment is dropping from 10% to 9%, and of course, these are the manipulated numbers that the government put out there, but we'll go with those numbers. And it kept falling during the time period and more people were getting jobs. Why was retail contracting at the same rate? It makes no sense whatsoever. Then we started to realize, they manipulated the unemployment rate. Those people who've fallen off, who haven't been on an interview for 4 weeks, they just don't count them anymore. They've given up. They don't want to make a living. They don't want to make money for their family. They don't want to go on vacations. They don't want to buy things in retail. Yeah, that makes a lot of sense, doesn't it? No, what's really happening here is they had to keep the illusion alive, and they had to explain away why all this was happening. Now, they started out with the weather. This is why retail is not doing well during the holiday season, during the spring, during the summer, and that kind of fell apart because how many times can you use it when retail continually falls apart? And what we're seeing today is that it is accelerating at a pace that we've never, ever seen before. And by the way, all those people are going to say, well, it's online sales. No, it's not. All of these businesses have an online presence, and online sales makes 1/10 of retail sales. That's it. Yes, the corporate media can throw out $3 billion here, $2 billion in online sales, but it's in the hundreds and hundreds of billions for retail sales. So online sales is a very small part of it right now. And we can see from these huge stores like Sears, well, they're rapidly deteriorating, falling apart. Right now, it looks like Sears is going to be cutting senior management positions. They're closing 92 pharmacies and Kmart stores, 50 Sears auto centers, and once this starts to happen, you know what happens to stores. They completely fall apart. We know in the beginning of 2017, there was going to be about 3,500 stores that would be closing. Well, that number has now jumped much, much higher. Actually, Credit Suisse, they're saying that barely a quarter into 2017, year-to-date retail store closings have already surpassed those of 2008. Well, that's an incredible recovery. According to Credit Suisse and their calculations on a unit basis, approximately 2,880 store closings were announced year-to-date, more than twice as many closings as the 1,153 announced during the same period last year. Historically, roughly 60% of store closure announcements occur in the first 5 months of the year. By extrapolating the year-to-date announcements, Credit Suisse estimates that there could be more than 8,640 store closings this year, which will be higher than the historical 2008 peak of approximately 6,200 store closings, which suggests that brick-and-mortar stores, well, things are about to change quite a bit. And it shows us that things are rapidly changing, and it's accelerating, and it's going to be a domino effect. Basically, the retail bubble has popped. That's what this is telling us. Actually, 10 retailers, including like Limited, H.H. Gregg, sporting goods chain Gander Mountain, and many others, they've already filed bankruptcy already. And this compares with 9 retailers that declared bankruptcies with at least $50 million liabilities for all of 2016. We know that BB Stores on Friday announced that they're going to be closing the remaining 170 shops. And they're just going to move everything and try to survive with online sales. Now, online sales, that does not handle most of their sales. So we can see what's going to happen here. They're closing all their stores. They're going to depend on online sales for a little while. And then their online sales, that is going to disappear. It's not going to be able to survive whatsoever. Even though people believe that online sales, well, that is most of the retail purchases today, it is not. And the worst part about all of this is that as all these stores close, what do we have? We have retail space that is opening up. And you have to remember how they calculate sales for retail. When stores close down, they don't just say, okay, you know what? Let's subtract all those sales because the stores went out of business. No, when the stores are closing down and they're completely out of business, they actually calculate it out over a period of time. So they might say the stores have closed today and they're all out of business and the stores are empty, but they will take that number and they will calculate it out over months and months and months to even out what is happening in the real economy. And of course, that's a type of manipulation. But we have millions of square feet that are going to be available. Actually, 49 million square feet of retail space has closed year to date. Now, should this pace persist by the end of the year, the total square footage reductions could reach 147 million square feet, another all-time high, surpassing the historical peak of 115 million in 2001. So at this point, we are seeing that this retail bubble is popping. The commercial real estate bubble, that is going to be a complete disaster. And this will have a domino effect on the rest of the economy. Actually, when we look at this and we look at bank defaults where they're completely insolvent, we look at corporate defaults, which that's going to have an effect. We have the derivative bubble, we have the bond bubble, we have the stock market bubble, we have the retail bubble, we have the commercial real estate bubble, we have the housing bubble, we have the auto bubble, we have the student loan bubble. This entire economy is one gigantic bubble, and each bubble is going to start popping one after another, and the whole thing is just going to come down. Now, those malls that are basically trying to survive right now, they are doing whatever they possibly can to survive, because what's happening is no traffic is coming into the malls. And this is because people don't have the funds to go out shopping, either in the brick and mortar or online. That is just a fact today. And what they're trying to do to drive people to the brick and mortar stores and these malls that are losing different stores and anchor stores, well, they're using the parking lots to have concerts, to have movies, to have carnivals, just to bring people in and have them shop in the malls. And what is happening right now, that is not working out too well either. But you can see this is what happens when times start to get tough. They start to use all these type of gimmicks to bring traffic in, and it's not working. And we have to remember that a lot of the news that we see out in the corporate media, a lot of it's driven by government, because you have to realize the government is living off one gigantic credit card, and they keep borrowing and borrowing and borrowing and borrowing, giving more and more people jobs, buying more fleets of automobiles, which need tires, parts, and things like that. And this is why they can spike things up and show that, oh, look, this corporation is doing better because we just bought 1 million tires. But the thing is, this is all fake, phony, and false, because what they're doing is they're borrowing against a credit card, using that money to give people jobs, using that money, or I should say currency, to purchase goods. And this is how they've been keeping the economy afloat. Now, this is going to come to an end, whether we like it or not, because it always does. And people say, no, it doesn't. This will continue forever. If you've never been in this situation before, you don't realize how things actually do come to an end. It cannot go on forever, because when your revenue base drops and your interest rate and your borrowing continually increases, it cannot continue forever. This is a proven fact. It will break, because if this was the case, we wouldn't have had all these recessions throughout the years. But we know why we've had all these recessions and the depression throughout the years. This has all been caused by the central bank. It has been caused by those individuals who are in control. They bring down the economy. This is why you need us. You need us to manage the currency. You need us to manage the economy of the government, of the world. And this is what we do. And this is what they continually do to prove why we need the central bank, to show that they have full control of what is going on here. Now, Charles Schwab came out a few days ago with something very interesting. They announced that the number of new brokerage accounts soared 44% during the first quarter of 2017. Now, people might be looking at this saying, wow, the market's doing well, people are getting into it. But more specifically, Schwab stated that individual investors are opening up stock trading accounts at the fastest pace the company has seen in 17 years. Now, to me, when I look at this is a classic bubble scenario. The last time we saw this, 17 years ago, was the dot-com bubble burst. And what we saw was the stock market rising very high, the insiders selling off their stocks, the retail investor coming in and purchasing those stocks. And we are seeing the same thing. Actually, it happens in housing too, where the insiders, they purchase as many houses as they possibly can, and then they start selling them off to retail investors because they pumped up the bubble. They pumped it up far enough where people think, wow, housing is going to continually move up. There are speculators, the mom and pop speculator who says, you know something, I'm going to get into housing right now. I'm going to start flipping. The first couple of times it works out very, very well. And they continually do it. They hold on to a couple of houses. They expand their businesses and they purchase 1, 2, 3, 4 homes. They start redoing those. And then what happens is the market comes down. And we're starting to see this not just in the housing, but in the stock market also. And if we look back, going back to the dot-com bubble, investors were rushing in to open new brokerage accounts and invest their savings in the stock market. Because why? They saw that, wow, the market's going up. .com is the wave of the future. It's basically all created to bring in the retail investor. And what happened was that the NASDAQ, well, that fell by nearly 80% over the next 2.5 years, and it wiped out trillions of dollars of wealth from the retail investor. The last phase of any bubble is almost invariably the euphoric shopping spree of an irrational public that buys stocks, real estate, and everything else at record highs, believing that prices will keep rising indefinitely. That's what happened during the dot-com bubble. This is what we're seeing right now. And if we look at what happened in 2008, what happened in 2000, and all throughout history, it's always the same thing over and over. It might switch to different sectors of the economy, but it's the same thing. It's one gigantic manipulation to make people believe that this is what's happening. And those individuals that created the bubble, they get out, everyone else gets in, and they crash the system because now they're on the other side where they're going to make a profit coming down. And this is what we're seeing right now. But this time it is completely different because we are much worse off than we've ever been before. They never fixed the problems in 2008, and we are going to see a collapse like we've never seen before. So get prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.